Okay, Wednesday, January 18, 2017. Okay, I run through the futures this morning. These are 2-day charts. Okay, Australian dollar. All right, Australian dollar is approaching basically the happy place. This is the most amount of where volume has traded on here, and it's approaching this area. We'll say around 76.10 in there. You can see that the money flow is up there, so the bodies are in here. The dollar has come off, came down to about around the 100 area. Gold's also yesterday, Tuesday, approached a band of resistance levels. So at best, a lot of markets probably pause here. I noticed, I wrote yesterday that I sent out to twits about people hiding out in euro dollars. There's a possibility of an extended period of where people are going to park their money in cash for a little while here. We'll see how it pans out going forward here. So on here, we basically have a bunch of bars going higher here today, and now we're having somewhat of an inside day on here. So at best, we have pause going on. But we do have bodies inside of Australian dollar on here. So it's one of those that, you know, there's not much left up here per se, versus a reversal bar on here. So in how I look at it is that you probably want to take some off on here. If the dollar does crack 100, the next level is 99. How obvious is that? But that's another support level on here. And if people do run into euro dollars, that would mean that they're going to push interest rates lower on the front end. All right, British pound. British pound had a pretty good move yesterday. The old news related by the rumor, sell the news, but reverse of that. The old sell the rumor, buy the news. Okay. Basically, the pound has come about halfway back. We'll treat this as a double bottom for now on the pound. You can see that the money flow, the bodies aren't in there. So basically, a reversal here, 124.25, should move it back towards back up to the upper range here if it's going to be in a larger sideways pattern. But right now it's about halfway back, and it's basically at pivot this morning on the open. There you go. Here's the pivot. So basically, it's bouncing off pivot. I don't think it'll pull back this deep here. This is a pretty hardy run on here. Happy places at 121.80, we'll say. This is a support area. Both of them on there. Pivot 1, pivot 2, week and day. Yes. Okay. Yeah, here's both pivots. So on a kind of a longer view on 2 hours here, the British pound came back to pivots, and in the happy place here this is basically the monkey bars on here. Where's that monkey bars? It's basically a bell curve of where prices traded. And I call this a happy place. This is basically the peak of the bell curve here. This is where the most amount of trading happened, and it also coincides with pivot. So you're probably gonna find support here on the British pound. And of course, I'm leaning just because it's one of those that they open up their face on TV and they say it's at a 30+ year low. I'm interested on here. Okay. Next area, 133. Okay, 132. All right. So, and the same type deal here. I'll treat this. It's sloppy and deep, but I just treat it as a bull flag. And trade higher, 125, probably a round number, the next target. If it does reverse from here and swing higher, you use it as like an inverted head and shoulders too, shoulder, head, and shoulder. Okay, Canadian dollar. Okay, Canadian dollar back up to its happy place. correlation with oil. Okay, some days it's on, some days it's off. And we go and move forward here. We're going to see that the bodies are in oil. I'm looking for a pullback in oil. This morning, where are we at? Oil's down 80 cents to 52.50 approximately. So the Canadian dollar should come off. You can see that the bodies are in here. Previous times that it tried to poke higher, came back, poke higher, came back, poke higher, came back. So Canadian dollar, same thing. So it does look like the dollar is going to find some support down here. Euro, okay. Treat this as possibly an inverted head and shoulders. It's about halfway back on here on the euro. If the dollar, I'm seeing at least pauses in market here, or expect markets to pause here. And right now, the euro futures here is basically about halfway back. How it looks though, that if it does break out higher here, there's enough money flow area that it can continue to run, and then it would shoot for about 109 area. But basically right now it's working a larger sideways pattern. Japanese yen, let's see here, I have to change you back. Okay, Japanese yen, you can see that there's still room to run on the upside. It basically came up and paused in its happy place. Same thing again, 50% halfway back. It's one of those that you have to see how this thing plays out. But a lot of these here, there was via the Commitment of Traders report, basically said that there's a lot of bodies in the dollar. Japanese yen, if it does, now the other thing too is if this Japanese yen continues to go higher, equities would probably go lower because of this is part of the carry trade. Japanese yen is used as in the carry trade. Okay, we're down to the back to the Mexican peso. Mexican peso, money flow's not in there. I believe that the Mexican peso would probably be one of the better vehicles for being long. This one here is the futures of long the Mexican peso or short the US dollar Mexican. That's how you collect the interest on this too. The carry trade is you buy one currency and sell the other. So you buy the cheaper yielder and you sell the higher yielder. Okay, so and the Mexican peso, to take advantage of the carry on here, you'd have to short the US dollar Mexican or that type of cross to collect the yield on here. Then the Mexican peso is one of the, each broker is different. Some brokers don't offer interest. You know, that's the downside of over the counter spot trading with currencies. One broker that I dealt with a decade ago when I was going to get back in the business didn't carry the Japanese yen. They didn't carry it out of far enough places. They kind of left off the fourth spot. So it's like, okay, you know, that comes down to, 10 ticks a trade here. So, it's one of those watch your brokers. I have a decent broker that pays interest, and the broker pays or charges interest per second. So I kind of like that compared to some brokers that do the next thing tomorrow, the next day. So on Wednesday, if you're holding, they charge you for the weekend or they pay you for the weekend. But I believe that the Mexican peso here on the long side is probably going to be one of the better trades for 2017 here, just due to the fact of how long it's been beat up. It has enough it has the news like the British pound. I mean, this is your bottoming action here is basically a Donald Trump trade or whatever. But we'll see how things go here. But another shot at shorting it, the U.S. Mexican on here, or in this case, getting long the futures. Okay, crude oil. Okay, crude oil. You can see that the money flow is here. Okay, the bodies are in here. I'm treating this as like a bear flag. Remember, these are 2-day bars here. So I think oil's going to shoot for the first. Here's a target of 48. Okay, you can see that there's a lot of area here. 48 would be a target, then 45. If you kind of look at this pattern here, okay, I really think we're going to actually come down even lower on oil. The deal is they're going to pump like never before. They're going to continue to pump. You know, before oil took off, you know, when it bottomed out in the late 90s, it was hanging around $8 to $12. Like I mentioned before, the first thing that popped up was R2, or excuse me, S2 on oil, and it was around 16 bucks a barrel. I just put down 17 because this year is 2017. So I'm shooting for a deeper pullback in oil here, just due to the fact that as the economy does slow going forward here, we're going to back up a bunch of oil. And that's the other thing too, is the growth on the planet is in China. I haven't seen recent numbers, but they used to put 25,000 new cars a day on the road. And so far, all we have is an ecological mess over there. But that's fine. It's over there, remember. But I think oil is going to come down here. Just let it continue lower. There will be times when the market does go against the grain, when we need to gouge. Summer driving season, that kind of thing. But basically, I'm just treating oil is peaked, and it's time to aim for 45 and clean up the money that's in there now. Dollar, okay, we have dollar about halfway back. We could possibly treat this like a head and shoulders. The correlation is as interest rates go higher, so does the dollar. So if the dollar comes down, in theory, stocks should come down. We had a pretty good day on Tuesday. Monday was a holiday. Market still traded, but they were a little on the soft side. All I can say is, going forward, you can't change the stripes in a zebra. So what you get is what you get. You know, I don't know how long the POTUS is going to last. Number 2 is probably worse than number 1, but number 1 is just, you know, more and more I read up about it. It's thin-skinned, and, you know, it's shoot from the hip and all this other fun stuff. But if the minions fall in line and do what they're told, I'll go along with that story for now. But the other one is that I guess there was some sort of poll that came out that there was a 40% approval rating, okay, which means 60% of the people are already upset. Okay, so that's past the tipping point. Okay, most of the time the people come in and they have high ratings, and it just goes down from there. So this is going to be interesting here. How I look at it is that too much of the market is already disgruntled. You know, the poll, but that's okay. I mean, in my world, you have to, you know, it's always darkest before the dawn, kind of thing, which is fine. You know, I wrote about before Brexit that if you wanted a patsy, we have to unwind, you know, not unwind the last decade, but unwind the last 100 years. We have the perfect patsy here. Let's see here. Okay, so this is on the dollar. Money's coming out of it. We're getting a bounce back about 50%. I could probably treat this as a head and shoulders too. You know, it's the marketplace that basically leads everything here. So we're seeing a pause in, you know, people running into debt and things of that nature, and the pause in the euro dollars. So we may have a larger sideways degree pattern on here on the dollar. ES, I'm going to treat this one here as, okay, so what do we have going on here? Remember, these are 2-day bars. Okay, so basically a lot of sideways. This pattern, the ES pattern, basically looks the same as Dow futures. Okay. These are resistance levels for this morning. We'll say 269, 270, and then 274, high of 277 on here. A bunch of pivots. Basically, if we close below, I'll say 260 here. stay on the short side. What do we have Wednesday? So we need the 20th, right? Okay, a couple more days. It's, it's one of those things we're just waiting for the inauguration and then go, but like I said, I'm just cautious after 8 years of being a bull. It's basically how I look at it in the marketplace here. A lot of sideways. You're talking Thanksgiving on sideways. Usually, so it's either two things. It's either pause before going higher, or it's the beginning of marking for distribution. Weekly real quick here, take a look. 2260, yeah. Okay. I had a lot of these go off in the last few days. Okay. So once again, here we are. The reds are pivots, and how I have this on here. I just put down person's pivots daily, and then just regular pivot points. Just two of them. I don't have monthlies on here. We're not getting much action for right now. Once the markets crack either way, a couple hundred points, then the monthlies will go on. For this, it's when we go into a corrective pattern here. Just a matter of time. That's all it is. It's just a matter of time. All right. Okay. So once again, oh, that was interesting. How did I get all those lines? All right. So once again, about what do we have? 2269, 2270. So it's at 74, 75, and the high. And then up here again. Now we're moving up a little bit here. So here's 85, and then these are pivots for the, Thursday on here. If by chance this does break out to the upside, then about 85 and 88 on here, and on the downside, 2250, and then 38 and 36 on the downside for ES, but just a bunch of sideways for right now. Basically, we're working on a it's a sideways pattern. So it's either a pause before going higher, or it's distribution and we're going to go lower. Where did my thing go? Blankety splank. Okay. E, F. Well, that's just odd. Technical difficulties. Okay, euro dollars. This is what I was talking about. Now, euro dollars are like T-bills in Europe. So there's money parked in banks in America and money parked in banks in Europe. As this goes lower, interest rates go higher, and this is on the front end. Okay, these are short-term deposits. Okay, you can see them, the spike in open interest on here, but here you have a situation with the money where the money's coming out of it. So basically what it is that they've already priced in somewhat bank hikes on here. So the market, the euros are susceptible to short covering on here, because we're basically trying to peg the market for when we stop raising rates and run the economy into a recession. And there's a thing called the TED spread, and it's the spread between treasuries here and euros over there. And as that spread widens, so is the anxiety. Okay. Basically, like I said, how I'm looking at it is that there was a period in the beginning of last year where euros traded higher, and we might be entering that too. If stocks, equities come off, they'll run back into debt. Okay. That's basically how it is. The markets are beginning to finally kind of correlate together here. So, if stocks come off, the dollar comes off, and treasuries go up, people hiding in debt here. And that's euro dollars. Here we have copper. Copper's loaded with shorts, 2-day bar. We sucked up basically 90% of it. It's loaded with longs via the commitment of traders report. for me, since I didn't bark out the sideways pattern, break out to the upside, it's been somewhat my nemesis. And I look at it as, it's one of these things where now, you look at it and go, well, you kind of expect copper to go under $2 from here. But I'm just leaving it alone here. But all I know is that there are a lot of bodies in copper who are long, so they're susceptible to a hard pullback there. Same thing here. Heating oil is broken. We'll just say broken lower, even though there's a tail here. So you expect heating oil to drop about 20 points or 15, 20 points. That's how I lean. This was that peak, that Thursday back, what have you, a couple Wednesday, Thursdays back. That was the reversal day. That's when I wrote about $38 oil. And now I dropped it to 17. Just because somebody has to do it. That's how it works. You have to stand up from the crowd. $17. And I just start waiting for everybody, when we go back into the 20s again, everyone to start writing about, or into the 30s, I guess. Everyone to start pulling my number out of their butt. And then it's like, okay, now they're jumping in. Time to go the other way. That's how it works. People are basically reactionary. I'm anticipatory. Like for me, I'm trying to figure out how to play out a stock market pullback of, say, S&Ps to 1,600, then back up, and then down to 1,200. I'm on the not as far as it goes up thing. I'm on how far down does it go. That's what I'm working on as a plan. It's usually how it goes. I just anticipate that's that. Okay, natty gas. All right, I wrote about a larger sideways pattern on the weekly, though, that the bodies are in there. Okay. The other thing, too, is that natty gas does have a seasonal trend of January and February trading lower after a seasonal high in December. Okay, so what do we have going on? What do you know? We're pretty close. All right. So, excuse me. Basically, I'm going to have to lean that at least this is a larger degrees sideways pattern to lower for now, just because of the amount of bodies that are in natty gas on a weekly basis, and that's all I'm looking at. Because you had a high, you have a series of higher highs, and then here your first a lower low. So at least bare minimum, it's a sideways pattern. But you could have where natty gas traded up, and then it comes back into this area, trades sideways, which would go back into my plan for trying to accumulate contracts for next year. Because I think next year is the year that we had 2018 that we get the drought and the hard winter. I'm living in Arizona now, so I don't have that touch that I did when I was living in the Midwest, where you could tell if it's going to be a drought or if it's going to, you're in tune with nature. Not too much nature out here. You know what I'm saying? I don't have the same touch that I did in with Mother Earth, with my sixth sense, that I did in Minnesota. Minnesota had clay type soil. Where I sit, there's a lot of metal in the ground. So now you're all sitting there going, what is he talking about? Is he talking about his lizard brain? Yes, I am. I reacted to a few, we'll say, political things, but I did get a little anxious before the tsunami. So it's kind of like gut feeling, when you put on a trade, your gut reaction, your brain tells you one thing and your gut tells you another, and you go with your gut. Don't go with your brain. The reason why you guys lose trades is because is that crap in between your ears. That's the whole thing. You look at this thing and you're saying to yourself, down, and yet it's only been pointed up. I mean, if you think about it, natty gas basically doubled in 2016. 160, what would that be, 320? We even did more than that. So natty gas Even though people are poo-pooing it, this is probably one of the better vehicles in 2016, you know. And even if it comes down to here and comes back down to 270, well, that's fine. I did write about the 540 thing. I wanted to see on Twits. I wanted to see what kind of reaction I got, and I didn't get anything. So basically, it tells me that the people ran into D gas and got blown out of the water. So when I throw numbers out there that are kind of off the mark, we'll say, you know, $17 oil, 540 natural gas. What I'm trying to do is gauge the sentiment of the marketplace. I can see it with the futures, but I want to see what the herd is doing. We know that day traders only have a lifespan of 9 months. Okay, so you fade everybody. You fade them all. They come and go. You know, they get a check from grandma or something, and they go run into the markets. They hold on a position for about, I don't know, 20 minutes. Unless it's a loser, then they hold it for, 20 months or whatever. It's just human nature. But for Natty here, I'm leaning that it's gonna be a larger sideways degree pattern. Even if it does come down to 270 on here, then there'll be a bigger play for start beginning to buy contracts for the following year, 2018. You could start off with like October, November, December, January, February, that kind of thing on there. But I will lean that because it's been pointing up for 9 months, 10 months, I'm going to lean that it's at least up to sideways on here. Okay, because this is a 17-year low down here at 160 on natty gas. But for right now, you have your first kind of short term, a secondary low. So you would get a springboard. You also have a gap here, which you could treat as a breakaway gap. So there may be a gap under here that's a measuring gap. When it comes down and tests below that down to say 260. But we shall see. From basically, like I said, right now it's just kind of stuck in a sideways. All right. Okay, same thing again. Here's the NASDAQ. Okay, so we're basically making some sort of flag on here for right now. And remember, the shallower the pullback, the more bullish they are or more bearish. Okay, so same type of deal here too. The money flow kind of stalled on here on the highs. You can see how it goes on here. So it's one of those, if we do trade higher, there'd be the chase after it. I'm leaning that I'm watching for basically reversal, where they poke its head through and then reverses. That's what I'm looking for in all of these. You go up and you come back, like this, and it's basically it's a retest, and you go higher and you pull back. But I'm waiting for where, you just move your entire stop from underneath here, and then when it breaks out here, then move it up. And that's what it is. If they're going to inch it forward like this, that's basically what I'm looking for, is just a reversal day. And it'll, of course, signal that a lot of this is going to be corrected. Palladium, somewhat of a flag on here to go along with the metals. I suppose you can kind of take this as a double top on here. The palladium has held up a lot better than all the other metals, but it is stalling here. Platinum here. Same type of deal, came up to its happy place and kind of rolled over. Same thing with gold. So we're back down to stronger dollar, weaker bonds, or weaker debts, and higher stocks. Or like I said before, save some money for POTUS if we get some sort of POTUS spike on here. Even though 40% of the polling people disapprove with Trump here, or that's his rating, so I guess it'd be 60% or, disapprove, whatever it said, whatever. We may be at the end of something here too, where they bring the giddy back, into the herd and see how that handles. That's how they handle it. Basically, like I talked about, as you have a January high for the year, and then you just roll over, and that's the end of it. Sugar, the bodies are in sugar here on a daily basis. So I have been following this on a weekly basis, but now I'm beginning to lean. You have to be a little more cautious on here. We may have a larger sideways pattern. So if we do get higher equities, higher interest rates, and a stronger dollar, that should begin to start affecting commodities. Remember, I talked about front running reports and all this stuff. It's just the stripes on the deal, on the stripes on the tiger, Kev. Okay, whatever. You can't change the stripes. I'm going to assume that there's going to be a lot of fuddy-duddy that goes on in the markets here now. Yeah, rules like you can have, your cabinet guys begin to start having their cronies put on more larger, above position limits and things of that nature. Teapot dome kind of scandal type stuff. But it's that kind of thing. If you open up the, more of Alaska to pump in, they're going to pump, and so, it's all in the marketplace. That's the other thing too, is, how many of these CEOs are economists? How many of these CEOs, can read a chart? I'm always amazed. They like Aubrey McClendon. He's both pulling it out of the ground and buying contracts, and he runs himself into a wall. It worked out so swell for him. Where if you only waited, but that's how you make the low. You lose a few $1 billion and put it in. All right, silver, same type of deal. It's in its happy area. Not much on the money flow on here. So basically, I'm going to treat this stuff, metals and all that, as a pause, and the dollar and things of that nature. We're okay. The first to crack probably would be your Russell, but your Russell, just like your NASDAQ, that's the indexes to be, because of the stronger dollar is going to cause problems for exports. 95% of the planet's over there. A stronger dollar is going to cause havoc with all these corporations and stuff. But basically, the Russell has been the one of late that's kind of having some issues. How are we doing this morning? All right, we'll see. Okay. Basically, like I said, this is either going to be a pause before going higher. It's distribution, and we head lower. Now, if these things begin to crack on here, like I said, I don't think these lows are going to hold. We'll run back and start making, you'll start hearing about 1 and 2 year lows, that kind of thing. We're long in the tooth. We've been doing this for, just because a new guy comes in doesn't mean we can't run this thing into the ground. Bonds and stuff, basically a pause. I wrote last week about the next weekly swing higher. You're looking for short. That's what I'm looking for, is an area to add fresh shorts on here. Okay. Stocks would have to probably come off to get debt to come up. But that's what I'm looking for. The next swing higher is where you want to begin to start looking to add fresh shorts. All right. VIX futures. We're getting yesterday's move basically got the folks excited. Same thing again here. It goes under 15, you buy it 15, 14, 13, here we got down to 12 and 11, and then sell it on the other side, 16, 17, 18, 19. The last time we played that game, we got to 20, 24 on there. Okay. Same type of deal. Okay. We're at the lower, 96, 97, 98, we're at the, basically you could say that, the lows down here, this is like once every 300 days kind of thing. I think of this actually, the lows down here, there's lower lows, and it actually goes back to, I think, like 2014. All right. So we're, you're reaching an area. That's how I look at it. That's that, the only decent product out there that I like on here for VIX stuff outside of the VIX futures, because they are pricey to play, is VXX, and they have options. So you just wait for it to come down and write naked puts. Okay. and that you want to buy that, then you can turn around and write the calls. The flip side is it's all pokey like this, okay, spiky, and that's basically what you're going after, okay. But I lie to myself and say that it's a hedge against your core portfolio. You know, hold on to your equities and purchase the VIX related stuff basically as a hedge until it's quite obvious that everything's going to collapse. And here's the Dow on here. It's basically the same thing too. A short, narrow sideways. You know, a trend is going to break out here, either to the upside, which I'm looking for a failure and a reversal, or, you know, in theory, to actually get it to swing, it should come down and kind of go underneath here and kind of scoop the folks up and then catapult, slingshot, springboard higher. But as you can see with the money flow, the bodies are in here. Okay, so this is susceptible to a larger degree pullback. And like I said, if we pull back, I don't think this is going to hold. I don't think this is going to hold. You know, all of a sudden we're back down to, you know, under 16,000. What do we have here? Bonds, same type of deal. Like I said, I wrote about it last week or so. A swing higher, go against it, or you're looking to add fresh shorts. Corn, okay, so corn, we have money flow bodies are in here. This really just looks like a larger corrective pattern into this here. You know, like I said, if you're a hedger, you know, do some hedging on this. You know, because if we do get the dollar to turn again, it's going to pressure commodities. Fives and twos and everything. Oh, this is interesting. Money's coming out of this thing here. Okay, probably if we do get a swing higher, money flow will go into it, and that would be a sign. See, here's the thing here is that the market falls apart. The Fed's not going to raise rates, and all these people in debt are going to have to get out of their positions. And that's more of how I'm leaning on all of this here. Bean oil, same type of deal. Talked about this with meal, though, but with bean oil, it did hold above its happy place and move higher, but it didn't have – bean oil didn't follow through like beans did on Tuesday. But there is room to run on that. You do have the crush spread, you know, crushed beans, and then you have meal and oil spreading against that. Excuse me. I lean the short side on all these commodities here, on all the eggs, non-meats. I lean on the short side, except for wheat here. Wheat may be having some follow through. To the upside. Soybean meal, same type of deal. This is, I wrote on meal that I lean short term, long on this stuff. But we're you know, to me, this is kind of looking more, this pattern is looking more corrective in nature. And that it's still holding the 50% mark here. So I'll still lean this way. It still has room on the money flow. We'll see how things pan out. Where are we at? January. So what do we do for February seasonal? Usually February is usually a low point. So we may have a counter cycle here where we make a high in February prior to, say, like May. May can be a period where markets top out when they're normalized. And if markets get giddy, the peak usually happens on July 4. No, it's the same thing. So money's coming out of this. Okay, I'm beginning to think that we're going to get a continuation higher here on debt prices and equities come off. All right. Okay, let's see how this pans out. So if you are short debt, what I would do is you probably want to write some in the money put options on here. Basically, this tells me that we're gonna probably reverse and go higher because the money's come out of this thing. Or sideways at best, just a larger sideways pattern here. And your beans have bodies in there. This looks like corrective in nature, halfback kind of thing, and then trade lower. That's how I'm leaning here. Where are we at with beans? 60s again. Yeah, this just looks like corrective in nature of this down move here. Twos, same type of deal. Some money's coming out of it here. This is where you want to short. You want to short the front end on here. And wheat, bodies are in wheat. We'll see how it pans out here. You have to lean. There's a, from the sideways area, it did break out. Might be one of those wheat. So remember when 4.25 was difficulty, we'll use 4.25 as support on here, but you can see that the money flows in here. Have to be careful on these. So for wheat, 4.25 is the your support for wheat. And we're back to the beginning. And so there you have it. So basically, it seems like we're all waiting for POTUS, and then POTUS has to do something. I don't expect POTUS to do anything. And then the market's on its own volition. No razzle dazzle magic tricks. It just does its own thing. The stronger dollar causes issues, with exports. And if you believe that equities are economically driven, to me, it's all psychology, with an underline of a macro, but if we do get stocks to come off, they'll run into debt, which I see that there's no money flow. So it's one of these where nobody wants to be long debt. Okay. Have interest rates come down. So it would be a long debt trade, short equities, and short the dollar. Okay. That's that. Have yourself a good day. Wednesday, January 18, 2017. Bye-bye.